Hello, good morning, traders. Welcome back to Forex Black Box channel. This is the 22nd of February 2020, Saturday um, re market recap. Okay, let me just start with disclaimer first. Thing first, disclaimer, guys. Forex carry high level of risk. Investment itself. If you exchange money for money, there's going to be high risk involved. You could lose all your money. And there is so much to say and tell about this story of trading, but that will be coming very soon in my trading course. I don't want to give away anything now, but I will give you a little bit of it. But let me just start with market recap and also comment on other user or someone watching my video and comment in different forums telling me that is you just tell us the entries and take profit and stop loss and which one's gone up and down. You don't have to make big video out of it, big deal out of it. So this kind of traders, they're kind of gambler. They just wanted to someone to tell them what to do, and that's not the right thing to do a business. If I have a shop and I learn how to do that shop businesses and all the stuff, yeah, and that job requiring me to focus on what I'm supposed to do to survive and make money out of it. Okay, not someone else to tell me what to do, what to sell, what to buy, what I should go do. Go to the source itself and learn how to open a shop or a supermarket or a car dealer or motorbike dealer, whatever the case is. I'm not gonna go just to watch the news and someone telling me or call a friend. You know, you can get some advice. However, the main driver of your business is you alone to decide the best for your business. Not only just take someone telling you, okay, close tomorrow. Someone told you, okay, close tomorrow because the weather is not going to be good, which is the weather is going to be in future, and you don't know whether or not it's true. You only need to make your mind up by yourself. You make your own decision. So if you think that video is not the right one for you, you wanted to just get someone to tell you what to do. I'm not that kind of person. I'm only explaining the market and that's for education and purpose only. I'm trying to help people because so much people come to trading and I think it's just if you put $500, it will be 5,000 next week and 50,000 the following and 1 million the next. I think it's simple and that easy. You know, it's not that simple and easy. Forex is not easy. Stock, future, any trading platform, any trading behavior, any business is not easy. You think Facebook it was easy? You think Amazon was easy? No, it's not easy. They need timeline here to succeed. And every time you spike higher, you pull back, you spike higher, you pull back, you spike higher in your business. And that's how it is. I never see any business just open today and next day worth billions and billions of dollars or 50,000 or whatever. It depends on how is your business itself should behave. There should be some pullback, some drops in the way, and you need to prepare for this. Your only job is to make sure you don't drop too far from your starting line. That's your only job, really. You only need to follow the right direction. You need to follow the right uh, rules in order to keep going. And if you lose a little bit, that's normal. Then you come back up. But if you lose so much that you actually crossing the threshold of your position, you burn your account, and you keep doing the same story. The next one, burn your account. The third account, you burn it. The fourth account, you burn it more, and you're really frustrated. That's not for you. Then that's a gambling. So my advice to you is, if you know how to trade, you don't need to watch my video. Okay, I'm not gonna give you the holy grail. I don't give you the holy grail. It doesn't exist. The holy grail is your brain. Okay, your brain itself, it will give you the opportunity to be successful. If you give it the right amount of information, the right amount of hour to practice, the right amount of knowledge, then you will be going up. But if you don't give that all and you expect someone to tell you from outside to tell you what to do, expect yourself to be like this in your trading, you know. and when you come to break even, you will come down again more. So you start in here, you give it some money. Okay, yeah, I'm a good trader, then pull back. Okay, I'm break even. Oh, I'm a good trader. Then the following time you like break even to lower than you burn your account. That's your limit. You burn your account because you don't give it the right amount of knowledge, time, and planning, and the right time to trade. There's so many things involved. It's not easy. Okay, guys, I hope that clear to you, who you viewer, my viewer, or new people coming after the market. This is not a get rich scheme market. There's no market in the world who will go just like that. Okay, there's going to be some consolidation first, then breakout of your original targeting. Now you know what to do. You pull back, it's okay. Expect the pullback, I'm ready for it. Then you break your previous record higher. You pull back, it's okay. That's actually in the market as well. That's the history or the story of the market. So, guys, please try to save your equity. Don't waste it for arrogant or wanted to just earn very quick money. There's nothing called very quick money. It's very quick money to do this. That's quick money for your broker, and that's why so many broker. You have no complaint of less broker in the market. There's so many brokers offer you bonus. You have to think about it. Why they offer you bonus? They want you to come in with your money, so you could lose it and give it to the broker bucket. Ultimately, when you go to, let me just quickly clarify this for people because it's so misunderstood outside Forex market. Forex market is you exchange the pound, for example, for a dollar. Okay. What you do, you go to the airport, you go to exchange shop or a market, whatever the case is, make exchange. You exchange that for that. There's a fees. Okay, that fees is the spread, and the spread on the normal market outside Forex in the digital ways, in a handy way or physical way, when you go to exchange that. So because you go into your euro or you go into US from your currency, from British pound to your dollar. When you go to the like post office in my area, I want to go there and I have like a 500 pips spread. Yes, you heard that right. 500 pips is spread. Okay. Why is 500 pips a spread? Because that's how they make money. That's how they make money. Okay. So now you do it physically. Now you want to do it digitally. Okay. When you do your bank is going to do the same thing, but less pips. Bank. Here you go, bank, and you go digitally. You go change your through the internet, and what you do, you just I want to change from that to that, and it'll give you the rate, the interest rate, or no, sorry, not the interest rate, the exchange rate. So you change that with some fees, like I don't know, if it's £1,000, you go to like a 550 pound, okay, something like that, 50 to 60 pound. That's their fees. If you calculate that in the right way, you will find it's about, roughly about 300 bips to the original price you see on your forex. Okay, that's one thing to understand. Now you traded digitally. Okay, the spread you say is 1 pips or to 2 pips. 1 to 2 to 3 to 5 to 10 pips. That's okay. Because you okay, yeah, that's fine. That's too high, guys. That's too high because the thing is, forex is not centralized. What does that mean? Basically, any broker telling you that I'm going to give you the volume of the trading forex, they're lying to you. They only give you the volume of their businesses. Okay, because it's just like when you go to the post office and exchange the rate, they give you the rate they believe it's the right for them. Okay, you understand that? They don't give you the rate centralized one location, just like future centralized. It's one price all over the world. Any big hedge fund, any big player, we will see exact the same price and exact the same momentum. It's a fraction of a second, but it's going to be exact the same price. It's the delay of the internet by the time come to your house to see it on your screen. Obviously, it's going to be 1 pip or 2 pip split. It's not uh, by the speed of light. You're going to get exact the same price in the moment of being printed in exchange, but it is close enough. Okay, regard of the digital age we live in now, it's perfectly enough. You don't have to go to Chicago itself and stay there and pay rent for your place inside the bit area, and you trade it because you see it right on the screen, which is a fraction of a second by the time to come to your house. I'm in London, okay? So that's the cost of being in London and trading what's happening in New York or Chicago, okay? So let's just get to the topic itself. So when you trade with your broker, you basically your broker is the shop, the physical shop, and he's giving you the price he see in the market. And all you have to do is just to exchange the money with him, the broker. Basically, that's it. It's very simple. So you actually giving your money to your broker, and your broker will take in the risk whether or not the price go up or down. That's what he does with millions of users. At the end of the day, he's always making money. Why? Because the greed and fear of people, traders. If you're greedy, you will lose money. If you're fearful uh, to hold to hold your winning trade, you exit early. Then okay, the broker is the winner, not you, because you fear that the price is going to go drop. If you calculate everything correctly, and back in history it was similar to it, and exactly proved that's momentum, then you stick to it, just chill, you stop. The broker is not going to be happy because you're taking money out of his pocket. You understand? That's one thing to know. You trade with the broker. You are here and the broker here. Between you two, okay, it's the market price. All right. What's the market price? From his bank. Okay, where is this bank connected to? Okay, so that bank actually dealing with so many banks at the same time, and they keep changing their rate the way they think it's the best for them. Okay, that broker only connected that bank. Some broker they say we connected to multiple banks and we'll give you the best price. They're only giving you the data. Okay, that they're not giving you. They're only giving you what's printing, what's the, between this bank and this bank. They give you the average price. However, you lose or win, you actually trading isolated with the broker. So basically, that's it. You don't go to the bank. Bank only lending money to the broker so he can do his business. However, you uh, trading between you and the broker. Broker, you. Okay. If you lose money, the broker is making money. It's trending, and you going down. If you make money, the brokers go down a little bit, and you go back. That's how it is correlated. Imagine how many client with this broker. He's making money. He's a millionaire, you know. He's making tons of money. He's making, first of all, he's making a spread. Second of all, if there's a commission in play, he will have a commission. Third thing, the greed and fear in his favor. He doesn't have to do anything. All he have to do provide you with the data and liquidity so you will be able to trade. Very simple. So your job is to be clever than your broker. Okay, that's a fact. You can't go around it. That's a fact. You're dealing with your broker directly, like you're dealing with your shop or the airport section. You go to exchange your currency to the currency you're going to visit. They are a business. They are isolated business between you and them. Our bank provide the data to them, and between the bank and the broker, you have no proof whether or not it's the best price. Could be a split. It could be like a split of pip or two different, and one pip in one lot is a lot. Okay, so you need to have the best broker, the lowest rate, and reliable broker of its data. It doesn't crash every time. It doesn't stop at news. They block everyone from trading. That's not the right one. You need to go for the top one. You know that you trade that directly. Your money doesn't go anywhere else. It's still inside the broker account. Okay. The broker job is to make sure that he's taking your money, giving you less than you're supposed to have. Your job is to be overriding all of this and trade the right move. Okay. You follow the broker rules. However, you're a winner at the end of the day. So I hope that clear to you guys. It's very important to understand that because there's so many misconcept about Forex. Forex itself, as I explained it now, I hope that will be clear to so many people. If you still have a question about it, you can leave it in a comment. And if you're new here, subscribe so you can receive my new videos. I do stream every day from 10 between 10 and 11 a.m. London time, Monday to Friday, hopefully. And I will be trying to do courses and stuff like that later on down the line between 2020 to 21 next year. So as you can see, even if I want to do this, I need to take step by step, step by step, step by step. I can't be just one day jump in and make a course. Okay, I have to explain a little bit of myself, who I am, what I'm doing, and all the stuff. I'm almost 8 years in the business, and I learned the hard way. I crashed so many positions before, so many account burned, like 3 or 4 of them. But I learned. Now I'm up there. I'm trending. Pull back some time, back up again. My target is still higher. Okay, I'm still trending. So that's your only job, is to make sure that you actually doing money out of the business. If the business doesn't do money and it's keep losing, there's something wrong. Either this business is not for you, or you doing something completely wrong, opposite of what you're supposed to do. Okay, if you put a petrol in a car, it's supposed to be working. But if you don't put a petrol in a car, it doesn't work. Something is wrong. You need to look down to the details, zoom into the details, helicopter view, where you are from your business, what is your broker doing, what is you are doing, what the market itself is doing, because there's no centralized price. So you ignore that. Okay, I will just follow my broker. Make sure your broker is actually giving you 1 to 2 pips negative or positive across. If you find a better broker, you close using broker, go with other broker. Okay. And for who the people that don't want to learn the original history of the market, or the original information, or the rules, I'm sorry if you don't think that video is for you, not for you. Just don't watch it. Very simple. I'm doing it for the people that really want to learn, the top people that want to be have a better life than what they are now. It's very simple to follow rules. If you break one rule or two, you're gonna see it like a pullback down on your equity. On your money, on your account, because you ignored a few rules, you broke your rules. So if you don't break your rules, you're gonna keep going up. If you put petrol in a car, it's gonna keep moving. If you fill it with oil, it's keep moving. You maintain it every few months, it's keep moving. But if you don't do this, if you don't do this, why you expect your car keep moving? Yeah, there's nothing magical about it. It's just basic things. You do one, two, three, you got the fourth, and you got your reward. Okay, I hope that explain it. Let's move on to the market itself. Okay, S&P 500 on Saturday, we're showing that it's really down, like 2.65% on Amazon, Google 2.21 down minus, and Microsoft 3.16. You see the market is going down. It could be pullback, it could be beginning of a down move. The reason being is coronavirus is keep doubling, almost doubling their infection across. Okay, I will show you quickly on the news where it is. Here we go. This is like 1 hour ago. Okay, BBC News UK provider. 1 hour ago, they told you here in Korea is just in one day the confirmed cases doubled. It's just in one day. So we are 229 now, and today is 433. The cases is keep increasing, and you need to go and look deeper on the history of human diseases like that, like influenza and all stuff, how much people have been affected and how the market reacted. There is so many information out there on the internet now. You don't have to get the buy the news every single morning or go buy the old newspaper. You have computer, you have a digital information, so use it for your advantage. Okay, so you need to go look around, see, okay, if you that could change your mind of next Monday, for the coming Monday of trading. It's going to give you more information. So my advice to you is to spend more time, dig around, learn, and see what the best for you. So you see that here go give you some chart here showing you what the coronavirus does. You see, it's very high. I mean, like that, because it's incredibly high. I hope everyone is okay. Please just to follow the guideline of protect yourself, your family, and loved ones. And the death here, look, cases is very high. Okay, about 77,700. It's gonna be maybe 100,000 soon. It's gonna break this line. It's like a market trending. It's trending. The rest, the SARS here you see is like 8,000 cases, but the death is 774. However, coronavirus is 2,359. That's really high, you know. It's gonna correlate together. They're gonna correlate. Soon it's gonna be very big here. This one's gonna be out of control. I don't know what the next 30 days is gonna be like. So just to be careful, guys. Okay, that's it for the corona. Let's go back to the market itself, and we can see that it's actually priced in the market. You see, the market is actually going down. That's the index or future, whatever. It's S&P 500. It's the stock. Okay, so that's what I mean. That's mean risk off to safe haven assets or dollar or your own currency, your local currency, basically. If you go to Forex now at this point, you can see that safe haven is really strong here on the day close. Euro strong, pound strong. What that telling me? That telling me is a lot of people from UK that were buying a lot of stock, and that's why they liquidated their positions. And Euro, which is a too big country, and Swiss, big banker, they do the same. What happened here? The dollar is just sinks down. Why it does that? Because I think it's a resistant area, and if I want to take my money off and I see the prices already in a strong resistant area, I will not gonna put my money here because it's not worth it. Where I gotta go? Go to yen. Here you go. Went to yen. Went to gold. So you see that gold is really green because there's a lot of money flying back from stock to gold, stock to these two together. There's a lot of all banks in UK that are Europe and UK. So both of them are going up now. So safe haven currency is Swiss. That's what we know about because normally when stock go down, the Swiss yen and gold they go up. Okay, but what happened now? It's even more risk off because we got euro is going up because dollar is going down. Okay, let's just we can have this. We got pound as well going up. That's mean dollar is losing value to this two currencies alone. And if you move your money from one place to another, you go to yen and gold and Swiss. Safe haven. The low in interest rate. That's why. Okay, so far as you can see, we have this two green, so I expect this one to be sideways for now. The euro pound. Oil dropped like 0.78% on Friday. Gold 1.57 up. USD yen went down 0.5%, which is indicating yen is getting stronger, and that's why I'm not long on pound yen at the moment. However, we're going to see some sideways between these two currencies until we see what's happened next. I think yen just dropped before this momentum. Like 2 days ago, yen was keep going down. I think yen was going to come back up and will break this momentum of going down. So yen is going to keep going up because of the risk of momentum going on in the market. So watch out for yen. Be stronger against Aussie. So Aussie, you can sell Aussie yen. You can sell New Zealand yen. You can sell CAD against you can sell CAD against yen. So basically, you're buying yen. Yen's got a lot of pairs you can take advantage of. And the right play at this moment is moment of coronavirus stuff. You buy gold. Gold is already hit highs. I expect some pullback. I'll explain later on. And you can buy yen, Swiss, and sell Aussie. So you sell this one, Aussie, sell New Zealand, and sell USD against yen. So you can sell these guys against the strongest, basically. So what do? You sell this sector, you sell them, and you buy this. You sell this, you buy this. Very simple. Right. The monthly, weekly. So it's only showing you the chart. It doesn't show you the color. Let me jump into the indexes. So basically here the index showing bound is just started the momentum. We broke and we have a wicks going on up, up, up. I think we kind of funneling now, like a funneling. Okay, okay, okay. Then I will see break up to retest this high. Could be fake out and go back down from there. Okay, so expect the worst all the time. If we start to close above this trend line here, that's my first target. If you come here, I will be exiting all pound positions for safety or risk off. And for my business risk off, I will be taking my positions right at this point, and I will be waiting for breakout retest. Then I will be getting back to the market. There is no cost of how many position or limited, so you can get in and out hundreds of times every day. It doesn't matter. It's not going to cost you unless only costing you the fees. That's all. You need to calculate everything correctly. Euro, you can see that we broke this trend line. It's still the momentum down. We testing this low. So let's see what's going to happen here. Whether we're going to have another leg. Probably going to have another leg down here to retest this area. Then probably we'll isolate a little bit. We'll come back up to retest this highs again. Dollar, you can see the day give on Thursday, give it back on Friday. We tested this low. This is very famous pattern. I think we're going to see some more momentum going down below the moving average will indicate it lower momentum. Yen, you can see that we dropped really big, as I told you before a few days back. We dropped and we hold here, just above this level, just below this lows. Looks like we're going to hold here, head and shoulder, almost. I don't really believe head and shoulder is just basically high lows, lower highs. It shapes as a head and shoulder. It's easy way to say it, head and shoulder, instead of saying high low, then low high. It's complicated to say it that way, but you can say head and shoulder. I hope you understand what's mean head and shoulder. It's just how much the market moving is a price action expression. New Zealand is keep going down, and we broke this area. I expect that the last 1, 2, 3 legs probably gonna come back up to this trend line. Maybe if we level back with it, we're gonna have one high here. What I see here, there's a one high, second high, probably gonna have the third high here, where the third high could be around this level. So we did 3 down, and we're gonna probably gonna 3 up. So we have expanded triangle. The breakout will show more momentum. I think the momentum is gonna go be up because New Zealand, when it was really strong momentum up, that could be just the pullback of that big momentum. If let me just expand this. So overall, I like New Zealand. I like to trade it. It's really good mover. I love pips in it, and I traded against the best. So if it's weak, I will long pound New Zealand. If it's strong, I will short pound New Zealand. If pound is weak, otherwise I will jump to Euro New Zealand. So far, what we did big push up, come back down, about more than 50-60% now. I think this is a holding place. You can see that the moment to start to lose. Here we had like 3 legs, the third leg now, and I think we're gonna come back up to break this channel. You see how far that will go back up here, break this high. Let me just make it bigger. Okay, that's better. So what we did here, we did break that high, we're coming back down, we break that low. We have 1, 2, 3 legs down. Let's wait for another leg up. We have 1, 2, 3 here. I think we're gonna see another wave up. 1, 2, 3 to break this high here. Then probably we're gonna come back another leg here. We'll start to making low highs, then we'll continue back up. That's my play. That could be only the target for the time being. We have a wave 1, 2, and we'll see the third whether or not we wanted to break higher. Give you a reason to enter a trade. It's make sense to trade it. So you have to give yourself a reason to open position. Don't just open position because your gut told you or someone told you to enter position without a logic. So CAD here, we have a nice momentum up. I think the pullback will come back down to this low, to this high here to retest it, and we're gonna touch the moving average. Will indicate that if we start to show in momentum back up, we could take that trade to test these highs again, or 50%. And until we come back down here and 50% of this move down, you see how the market behaved. Probably gonna have another leg down to retest whether or not to break lower a little bit. Maybe we'll come back up. Then we'll have two lows, two lows here, two highs here. Then we'll see from there where we want to go. But we are here now. So what's the next move is see at least 50% of this move overall. Can come in 2 waves or come in 1 wave. It depends how strong is the momentum going down. Aussie, you can see Aussie that risk off momentum. We have 1, 2 tops. We have a nice two tops. This pair is going down, guys. This is a two tops, a nice trade. You can pull back here. You see, it's keep going down. I think it's gonna go break this low. Just mark my word for it. This is very, very strong momentum here to go down. However, this is a 50% of the move of this move. So we come back down here. We come back 50%, test it twice, and the seller bid to go lower. That's what that means. That means a lot of seller than buyer. And that means it's gonna push the price even lower. Swiss is trying to break this candle here, and so let's look. We broke this level, this trend line. We have one push down, retest, push again, and we coming back. We broke the 50%. I think is gonna do another leg down. Probably continue back up to challenges highs. So that's risk of momentum going on in the market. Swiss, I think, is going to keep going up. So let me just recap quickly for the people who wanted to know what's going to happen. I think pound will like to challenge his highs. That would be my target. I think euro, he wanted to come back up here to these levels. So euro and pound are going to go up. USD, I think it will like to come back here to break this low, retest, and continue back down for pullback. Yen, yen is going to be strong a little bit. Probably going to retest these highs again. Try to break it and do a test of that trend line. New Zealand as well. It's kind of like 1, 2, 3 legs down. Probably going to see some momentum back up in New Zealand itself, independent, like nothing to do with the stock. It's like both of them that are holding. So let's see. I think this one is two tops here, very strong momentum. We come back inside this trend line. We challenged it many, many times. We couldn't break. We have a very strong momentum here, red day, and the following Friday, follow up. So that momentum can keep going down here even lower. So we have one leg down, two. I'm looking for the third one. Third one going to be down the line here. Swiss, I think, is going to keep going up to retest this high. It's probably going to break it by 10% or 5% of the move. Uh, so we come back down, we're going to break it high and we'll continue back up. So measure move of this move will continue back up. CAD, I think CAD will like to come back down here to test these lows. We'll watch oil losing momentum. So I think we will touch down here and probably we'll do another leg or short term pullback to continue back more down to these levels. Okay, so your target here, that will be that level, first level, second level. Overall, you'll be monitoring the 50% rotation, how they're going to hold. If it doesn't hold and actually losing momentum, then we'll go down. If you hold, probably expecting 50% of this move to pull back up, then you can sell it, you can buy it, you can sell it. Okay, and that's how you do your business, my friend. So let me quickly look to the pairs itself. Here we go. Okay, let me just start with S&P 500 because it was very interesting on Friday. I did really good with it. I knew that's going to go down lower. It's very, very clear momentum. We broke on Thursday. We broke the previous day. Let me change the color. What we did broke the previous day low. We go all the way down. We break the few days, and we went all the way down to these two candles. Outside candle here. We broke all through, all the way down to it. We'll come back and we close below the previous day. That's indicating the momentum is really strong. The following day was Friday. We went down really strong, but not as much as the previous first day. So what happened here? We're losing momentum. We're losing momentum. So I expected to see another red day to touch this level to see another pullback to 50% of this move. So my play is from market is going to open, probably going to see some wake up here, then we will be continuing down. The best time to trade it is only on 2:30 p.m. London time or 9:30 Eastern time. That's the best liquidity time. You can actually see the market moving. Other than that, you're probably going to lose a lot because the contract is very, very high and costly. So what's my expectation? To see another leg down, three down momentum, three legs, three, 1, 2, 3, pull back to the 50%, then probably we're going to see more momentum going down if the coronavirus is start keep going up in its infection and death and so on and so forth. So I hope people safe out there. Please take care of yourselves. We look at crude oil. Here you go. We just measure this area. We had a pullback, come back down, another leg down, and we third one, we touched the 50% and we start sinking down. You see that? We couldn't hold it really. So we closed below that day here. What's giving you 1, 2, 3? Probably gonna come back down again. Whether or not we'll be holding for another leg down to continue back up, or actually was gonna go down and break a new low. So far we have one momentum down, got a small minor, two, double bottom. So I can call this two. On the long term, we're gonna see another leg down. That's my view. One, two, and the third one will come. Why are you telling that? Because the 50% here, you see, reacted to it. The seller insisted to sell it more because they wanted third bottom, probably going to break lower, or fake head, or just around this area. Fibonacci, if you follow Fibonacci retracement. So why I didn't take it from here? Because that's where the pullback happened. Then the seller started to take reacted from this pullback, and we keep going since then. And that's where very strong area to measure your moves. Coming back down, coming back up 50%. Now what happened? We see that momentum is going down again. Only we got, if you look to the color itself from this section here, we see more seller than buyers. Okay, it's just almost even in the move, but the pressure is so strong. We got one, if I calculate from here only, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days red, 1, 2, 3, 4, 5, 6, 7 green. So 11 and 6. Who's stronger? Whoever pushed it down took profit and pushed it down again, and I exit their position, then waiting for a nice area to resell, waiting for discount. Here we go, the discount, you got it, 50%, push more lower. That's what's going to happen, I think, because the calculation and the picture itself looks good. It looks like we're gonna break lower. We're acting at 50%. Enough of oil. Let's move on to gold. Gold so far, I draw some trend line here for you to see. Just get this moved. Okay, so that we're looking at the daily now. We have one trend line push from here. We tested many times. However, broke below it, and we kind of back up again. We broke inside it again. So I think that's going to do another breakdown to this trend line. So what the next move is, I think we're going to do this, come back, and we'll break below it, and we'll come back to this support area. First, aggressive entry if you wanted to long here. Well, I recommend it because if coronavirus keep going trending up, I think we'll see gold about 1700, 1800 very soon. So we're looking for pullback, discount, and two legs ABC to this level, then you can buy it back. However, we can touch that trend line as well because this trend line is one touch here, two touch here. Probably going to look for the third leg down. So you can start to buy from here, then you put your break position as soon as it start to come closer to this level, and probably going to react as soon as it come closer to this level. So that's my play. Come back down here, push back up. Happened before here. We pushed back up, come back here, one leg down, and we'll continue. What's going to happen here? We have push down, leg one down, and we'll continue. I recommend to buy gold for long term. Don't try to buy gold with expensive fees. If you want to leave it for long term, you can go to buy the stock itself, to buy the asset itself, not to trade it. You can actually invest on it, but it's quite too late. You could have done that breakout down here. We don't know what's going to happen in the future, but we have one factor here is the coronavirus. It's a high risk and keep climbing up, and the cases keep increasing. It's kind of almost doubling every single day. So any pullback is a good chance to buy for high. I think the money will be moving from SP 500 to gold and yen. If yen shown some weakness, I think the majority will go to gold, and gold will kind of like spike even higher. 2000 is going to be very soon, guys. It's going to happen before before the half of the year. I think we're going to reach the 2000 very soon. It could happen next week, next month, but it's going to happen because of that coronavirus taking place. Strong momentum up will be required. Rest of heaven, okay? Just make your mind up. Daily you go low time frame, see how much you're going to buy. However, your stop loss should be below here, okay? So if you want to trade it, your stop loss should be below that red candle, not before. Before you'll be like you could hit in the big run, or you can wait until it come down here, okay? Or you buy the breakout and you leave your stop loss below there. It's going to be very, very high risk, but your reward is going to be small. So you better off wait for pullback at discount. And that's what the most trader will do. They wait for a discount. They want some discount. There's no much interest to buy here now, unless the news is going to drive it higher of the coronavirus. But if that's the case, wait for pullback and you buy it cheaper. You leave your stop loss below there. You have like 50% risk off your account. If you buy here, it's like 100% of how much you're expecting. You can reduce your lot sizes as well. You can play that around. Okay, so we're looking at Bitcoin. A lot of people like to trade Bitcoin. Here we go. We have kind of like we're holding down here to kind of rejected price. How far rejected? 1, 2, 3, 4, 5 days, and the 6th day today is actually open. So I think that we're going to see some push down. Why I say that? Because we have a top here, second leg, that could be the third, and the third is going to push lower. Why? Because 1, 2, probably that's the third one. What I'm looking for, 1, I'm looking for 2, and we'll see if we got the third one down or not. Measure leg. Overall, you like the head, shoulder, and going down. That's your neck. That's a neckline. Neckline will confirm if we break lower, retest, and continue back down to this level. I think the 8,400 mark, it will hit soon. We'll see. Because most of the best asset to trade, to put your money on, is gold at the moment. Gold is safe haven. Okay, if the coronavirus go wild, there's a lot of things gonna happen. I don't want to tell you what it is, but it's huge. The internet can go down, bank can bankrupt, countries that don't have enough money to cover. Then gold is going to be the only safe haven that I actually can invest on. Bitcoin, I don't think Bitcoin will be a safe haven. It's a digital currency. If anything go wrong, the people that go do electricity, the people that do look after your internet and digital currencies, they'll be sick. They're not coming to work. Then this currency go down. Gold, at least you have certificate from the exchange that you own this gold property. Okay, I hope that makes sense to you. Not even gold safe in digital way. You have to have like I don't know. I don't want to talk too much about it. I think it's something big if that get out of control. Dollar index, you can see that we broke the previous day low, 2 days low, and we're going for the third one. That's what I expected. We're going to see something similar to this, and we see it up there. So if you look here, is a mirror price action, and we keep going up. We're going to see that we're going to come back down. So there's the two factors of this. One is we have a strong resistance area. I expected that to go down, to keep going down at least 50%. You can make your mind up. Probably going to have some pullback at the 50%, and we'll keep going down later on. Also, the second factor is Euro USD. I think we'll break a previous low, very strong support. Probably going to see some pullback. So if we go to Euro itself, USD, we see the exact opposite of what happened to dollar index, just upside down. So if the dollar index come back 50%, we'll see Euro USD coming back up 50% of this measure move. Okay, if I put that correctly, so that's your 50% move, 0.936 exact on it, but you can actually can break it by a few pips and probably go down again. The reason being is very strong momentum coming back 50%. I like to see another leg to respect this area. Then buyer will be interesting to get in the market on the second leg. They just want to see a proof. Investor want to see the big player actually wanted to move the market that way, then they will join. Other than that, they stay out of the market. So that's my view on Euro, USD, and dollar index. Here yen getting stronger. You see that two tops in the 2 days will come back nicely. Probably going to have one push up and continue back down to break this low. Then we'll be looking for 50% of this move, which is going to meet us at this range. Probably going to come back, retest this range, and we'll see what's going to happen from here. Pound USD. The pound USD, the cable itself, it was weak a little bit last few days because the dollar index keep going up and dollar itself is strong. If you notice that we didn't really do a major crash, you know, like euro just keep going, keep going, keep going, yeah, against the dollar. But see, look here what pound does. I brought here as well, guys. I brought here, I brought here, and now I'm in profit. But I brought big. I brought like about 60% positioning down here than what's here. So at the moment I'm break even, but I don't want to exit. I still keep my four position open down here, and I have four up there, but the majority strong positions down here because the in lower time frame I saw that we just broke this low and we're coming back strongly up. So we have a very strong bulls in the market now. I'd like to see the follow up of the days to break this high. Then I would like to see the third day up there. So I think that's going to happen next week. That's the play. Next week we're going to break this high. Then the following day we'll broke this area at least. I'll be exiting the large portion and the medium portion of this position up there. Okay, but there's going to be isolated area. What happened next? We'll come back up here. We'll do 50% of this move. Then we'll continue back up. That's big investor, big banks, how they trade. Okay, euro, pound. I think this is going down, definitely going down from this area here. 50%. Try to break it again. We couldn't. Then we broke down to this level. 50% of this move, and we'll come back up again. 50% of this move, then we'll go down. Now we have 100% momentum down. What happened is we went up and we rotate back down. We didn't break the low yet. What happened here? 50% of this move, and we're coming back down to break a new low. So I will start to count from here. That's the first leg. I will look for a second leg, a third leg. Where that can go, I don't know how far it will go, but I'm looking for 200 bips at least at this pair to keep going down. Why? Because we see the momentum here, so many sellers, a few buyers pushed it only to 50% of this move, and now the seller in the play again, always in the sell. Okay, if you look to the bear itself, sell, 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 give you discount, sell it more. Okay, no, ignore this. Despite that yen is strong, however pound holding its level, the player is still in the market. They believe pound is gonna skyrocket soon. We at this level now. I already exit my positions here. I'm looking for another leg down. I have one, two, three before breakout higher. So I'm looking for pullback next week. Hopefully that's gonna happen overnight. I'll be adding position as soon as the market open to long it around this highs or this close. So to continue back up, my target will be ultimately at this close. It's not far. I don't have to trade it, but I've got majority of my position on pound USD and pound Aussie. I expect it to go higher and higher. Pound Aussie, as you can see that we keep going. 1, 2 pullback, 3, 4 pullback, 5, and we keep going. You see that triangle? We broke above it, come back down. Seller couldn't push it lower. Buyer comes strongly. 1, 2 days, really strong momentum. I think from Sunday night, we're going to see the test of this high. I think if we could be open with a gap as well to test these highs. If we come up here, I'll be exit my positions and wait for fulfill the gap to give me pullback. So that's what it is. If we open here, that's actually the market moved up here and will come back, give me pullback. So I will buy in as soon as the gap close. The gap, as I explained it before, is nothing to do with the market. It's the broker been disconnected and connected to to their bank. Bank close over the weekend. They don't share that data with their broker, their client. So your broker is a client of the bank, basically. Like me, I'm client to my bank. So the bank closed over the weekend. That's why I don't receive any information from my bank. Same story goes with your broker. So if you see a gap, that's actually the market actually moved it. There was a money involved inside this move. That's your banks of your broker. That's the bank of your broker. So yeah, as I said, expect some gap, and that gap will be pullback to give you one more leg down. So we have one big here, a medium one, and probably the third one before we break higher. I know the video getting long, guys. That's education video as well as information. So if you bored, that's your problem, not mine. And I'm giving you my experience in every video I make. So take it wisely because it's gonna help you down the line. As I told you guys before, I told you this is gonna break a new high. It did indeed. We broke to 2.05. The last time we've been here, we tested this high, but I think that momentum is actually keep going. Okay, so bound is not even fully strong yet, and we up there. Imagine when bound getting stronger, we're gonna see another big leg up. What happened here? We have one leg here, second leg, the third, and the breakout is strong. Coming back one leg, second leg, and looking for the third leg to break even higher. So watch out for that. Okay, pound CAD, you see that indecision. I already brought as well here at this indecision because it touched special area. And as you can see, as soon as we touch these two trend lines, these highs, this area, here, we can what happened? Sideways indecision going on. Then the next day, the bulls win the market, the auction, they won it, and we're gonna see continuation follow up. My follow up is gonna be a strong momentum up here if we break this, and if we actually get to break this trend line. Okay. So the 50% of this move is here. Again, double tops here. That's the 50% of this move. Come back here, and probably going to see another leg. We'll continue back up. That's my play. First leg, second leg. I'll be exit my position at the first two tops, and I'll probably wait for the second leg to rotate back up, and we'll be trading the second leg up move to these highs. So that's my original target. That's the medium target. Then I'll be buying back with a discount as soon as they come back up here. It maybe sound complicated, but that's how I trade. I need to look where the possibly the market wants to go according to the history of the market, how much time he's pulling back, how much time it does this. That's something you will learn with time. Okay, bounce Swiss. Swiss is strong, of course, and you can see that we have double bottom, one leg, and the second leg is quite strong. However, we're still above it. Probably going to see some rotation from here to retest these highs again. So what so far we're doing highs, lows, high lows, and we kind of like isolating here at the time. So we start getting smaller until we break out either up or either down, like a funneling way, like a filtering, like which one is gonna win. Is auction going on now? It is unnecessary to buy this pair or sell it. I don't really touch it much, maybe once or twice, but I don't really put big money on it. Okay, guys, I think that's it for the market recap. I know it's quite long, but that's the cost of you learning. And this stuff is free for you now. And I know the internet is full of things, but what does make sense to your logic and business, you can take it on board. It's free. It don't cost you a penny. All you have to do is just to learn. That's up to you. There's nothing I can do here. I'll give it out for free for you guys, and that's up to you really at the end of the day. You own your own business. I don't own your own business. I own my own business. I don't know what I'm doing. I'm taking responsibility of my action. Okay? Right, guys, if you the first time for you, please subscribe, like to help the channel to grow. So more of you will know about me and about how I trade. And if that suits you, uh, please leave a comment, say how much that helped you down the line. Make me feel better. Make me feel I'm doing something for you guys. And I'm enjoying doing it. I'm not looking to earn anything out of it. If anything come out of this channel, it will be for donation. I will donate it out there because all okay with me. I don't need to be uh, earning anything out of it. It's just make me feel good to give you what I think and to give you my knowledge. So anyway, guys, thanks very much. You have a beautiful weekend for Sunday or the rest of the weekend, and please leave a comment if you don't understand anything. If you have any question, leave it and like, subscribe, share it as well. Thanks, guys. Have a great weekend. Take care. Bye bye.